Fibercom Incorporated manufactures fiber optic cables for the computer and telecommunications industries. At the request of the company vice president of marketing, the cost management staff has recently completed a customer profitability study. The following activity-based costing information was the basis for the analysis. Okay, and then what you see in this section here is that there are customer-related activities, sales activities, order taking, special handling, and special shipping. And the cost driver base was sales visits, POs, units handled, and shipments. And we have a cost driver rate. So it's $2,000 per sales visit, $400 for PO, $100 for units handled, and $1,000 for shipments. Now, cost driver data for the two Fibercom's customers for the most recent years are listed in this middle section and here to the left of my mouse. So what they tell us here is there were 8 Caltex visits, there were 6 for Trace Telecom, 15 orders for Caltex and 20 for Trace Telecom, and so on. Then down below on the third section, they've got some additional information for us. The sales revenue for each customer, the cost of goods sold incurred for each, general selling, and general administrative cost. And then there are the requirements, and I'm going to slide down so you can see that now. And we're only going to work through requirement 1 on this exhibit. And the requirement says, prepare a customer profitability analysis for Caltex Computer and Trace Telecom. All right, let's slide back up again. Alright, now what I think I'm going to do is shrink this so that we can see it on the screen and I can put the solution on the screen as well. Actually, trying to shrink this is going to be difficult, so instead I'm going to put the solution on another page. And let's take a look at that solution right now. Okay, on the screen there you see this solution. And what you see is the customer profitability analysis has 2 columns, one for our Caltex computer customer and one for Trace. And then we just drop in the numbers, right? As at least on the top part. Sales revenue was $380, cost for $160 for Caltex. Trace, it was $247.6 and $124. And these are in thousands. And those numbers came from right here, $380, $160, $247.6 and $124. Then we've got to do the multiplication. We take 2,000, the cost driver, times 8 visits to come up with 16,000. And you see that number right there for sales activity. Now I'm going to skip over this till the end. And order taking was 6,000, or 6,000 for Caltex. Well, how did we get that? We took 400 times 15 orders. That gives us our 6,000. 20 orders times 400 should give us something a little bit more, right? $8,000. And we use the same approach to handle special handling and special shipping. Now, they already made an attempt to allocate general selling, or at least to identify general selling cost for each customer, so we don't have to worry about that. The 48,000, the 38,000, the 36, and the 32. And so we drop those in there as well. And when we do all of that, we can calculate a customer profitability analysis for each of these 2 major customers.